So everyone's like, what the fuck is going on, Raoul? I'm getting millions of messages. Where's our fucking banana? I get it. You know, these things, these macro spasms, they happen from time to time. So let me talk about what's going on right now, the slightly bigger picture framework, so you can understand why I think what I think, and then we'll tie it back down to markets and even a bit about the banana zone. Now, remember, my timing is not your timing. My timing is a longer term time horizon. I'm really trying to time this as a business cycle. So that's into the end of 2025. That's my time horizon. I don't trade around. All I do in sell-offs is add if my view hasn't changed. And I'll show you how my view hasn't changed.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Raoul Pal's urgent update on the latest market crash that has wiped out billions of dollars. There's proverbial blood in the streets. What's caused this sell-off and what's next?
So if you are a shorter term time horizon, I can't really help you because I think that's a very, very difficult thing to do in crypto markets. You know, some of my all-time favorite traders and investors, kind of legends of the industry, who are very big into crypto, so I'll never trade it. Even though these guys were famous for trading, they're like, buy and hold works much easier, it's much less stressful, and you don't get caught out with a massive volatility. Anyway, so what the fuck's going on? Why are the markets puking? Why is everybody gripped with fear? Well, it's a story of the yen. But the yen is not the whole story. The story is actually much bigger. You see, what's been happening is we have needed stimulus into the global economy because the economy has been slow. The ISM survey has been bumping along the bottom. China's slow. Europe's slow. And you see, one of the component parts that allows for this all to move hadn't really been playing ball. Firstly, it was US rates, but the Fed gave us that signal. So that started moving. But the big one is King Dollar. The dollar has been strong, and a strong dollar is a tighter financial conditions, which doesn't help markets and doesn't help economies. You see, at this point in the cycle, when there's no inflation, or inflation is falling fast, generally you need a weaker dollar. That brings global growth.
The Crypto Fear and Greed Index has just tipped into the extreme fear zone for the first time in 2 years, as United States spot Bitcoin exchange-traded funds reported outflows of $168.4 million in trading on August 5. The index, which measures market sentiment for Bitcoin and the broader cryptocurrency industry, fell to a score of 17 out of 100 on August 5, the lowest it has been since July 12, 2022. The index score was 67 this time last week on July 29, marking one of the biggest week-to-week declines in recent years. It comes as spot Bitcoin ETF reported $168 million in outflows on August 5. Most came from the Grayscale Bitcoin Trust and the ARK21 shares Bitcoin ETF at $69.1 million and $69 million respectively, Farsight Investors data shows. The Grayscale Bitcoin Mini Trust, VanEck Bitcoin ETF, and Bitwise Bitcoin ETF managed to record inflows at $21.8 million, $3 million, and $2.9 million, respectively, while BlackRock's shares Bitcoin Trust recorded a zero. However, the spot Ethereum ETFs saw a $48.8 million inflow, led by a shares Ethereum Trust at $47.1 million, according to Farsight Investors. VanEck and Fidelity's Ethereum products also saw inflows of $16.6 million and $16.2 million, respectively. Sentiment fell when Bitcoin and Ethereum tanked 10% and 18% in a short 2-hour window on August 5. Over $600 million in leveraged long positions were wiped out, including many altcoins that were hit far harder than Bitcoin and Ethereum. Trillions of dollars were also wiped from the U.S. stock market on August 5. The market stumble has been led by weak employment data, slowed growth among major tech stocks, and revived fears of a recession. Independent trader Bob Lucas described the last 3 days in a 1 in a 7 to 10-year event, which saw more than $500 billion wiped from the crypto market cap. One Bitcoin analyst, Tour de Meester, believes Bitcoin could bottom somewhere between $40,000 and $45,000, though he cautioned against betting on it. In a Bitcoin bull market, you don't take bearish bets because prices can whipsaw back up in no time.
Yet again, the Japanese started the ball rolling by starting to intervene in the currency markets. That pushed down the dollar, and a big unwind happened. Markets puked for a short period of time as this happened. But the Fed then stopped hiking. They was just starting the hiking cycle, and if you remember, they then stopped for an entire year. But others managed to massively inject liquidity because of the weaker dollar. And what did that do? Well, it set off markets after this spasm into a huge bull run. 2018, a huge bull run, because what you're allowing is the injection of liquidity, more cowbell. So that's where I think we are today. We're setting ourselves up for liquidity, but we need to digest the volatility of the currency move first. Now, how long will that take? Usually, it takes a week, 2 weeks, 3 weeks, sometimes 4 weeks. We've got the added complication of what's going to happen in the Middle East. I don't know the answer to that. But anyway, these are the kind of factors we're playing with. And I think of them as spasms. These are short-term macro things that don't affect the view. You see, something like this can be really problematic if the business cycle peaked and we're on the way down. That's what tends to exacerbate slowdowns. If the business cycle is rising, driven by liquidity and financial conditions, which is what it has been, and I'll show you some stuff on this in a sec, then these tend to be short, sharp corrections, a pause that refreshes, a kind of resetting of leverage in the system that allows the markets to recover, and often very sharply because it's followed by liquidity. You see, when the cycle's falling, it usually means inflation's too high and therefore they can't inject liquidity and don't want to. But this is the reverse, right? So this is actually a magic setup. Now, the business cycle, remember I said, well, the business cycle is bottoming and not peaking. I know there's a lot of noise about recession. A lot of that was priced in back in 2022 from the forward-looking indicators. What we've got is the cyclical elements of the economy, car sales and stuff that are slow, miners and stuff that are driven by the business cycle. The business cycle is still chopping. Now, people say, yeah, but look, it rolled down. Yes, it did roll down. It happens at every low of every cycle. You tend to have this correction, and that's where we are now. So you can see the last 2 decades worth, you get this secondary dip before you get the recovery. So that's where I think we are now. It's kind of noise because most of the markets I concentrate on, crypto and technology, are priced off liquidity conditions and financial conditions. But we are at the relatively slow point of the economy where rate cuts are now kind of preordained, and the things that back it up are things like unemployment. I've been talking for a while that unemployment should rise. I don't think it's going to go super crazy, but now we're at the point where we're beyond the unemployment rate of the most negative Fed member. So obviously the signal is there to cut rates, and the Fed have made that clear. Maybe they come sooner, maybe they don't, maybe they inject liquidity in different ways. But either way, unemployment has been rising, and that is a key factor for the Fed, and inflation has been falling, which is the key factor for the Fed. So it's green lights all round to cut rates, and cut rates allows liquidity to come into the system.
Bitcoin's decline since the April 2024 halving is starting to look similar to market movements ahead of the 2016 bull run, according to veteran trader Peter Brandt. In an X post on August 5, the analyst said that the BTC decline since halving is now similar to that of the 2015 to 2017 halving bull market cycle. Brandt compared the depth of the market corrections since the halving dates, noting the similarities. In 2016, the Bitcoin halving occurred on July 9, and the price on that day was $650. The markets retreated during that cycle to a subsequent low of $474, in a 27% post-halving decline within a month before rocketing to a cycle high of $20,000 in December 2017. On August 5, ITC crypto founder Benjamin Cowan said in a post on X that the pattern had mirrored that of 2019 when markets surged for the first half of the year, then dumped in a massive correction for the second half. Tim Krauchanowski, founder and CEO of the decentralized telecommunications network Chirp, commented in a note to Cointelegraph that crypto assets could recover much more quickly than other risk assets, as they did in 2020. The massive sell-off was not a crypto-specific issue, as macroeconomic factors are in the driving seat, he said. Over the coming hours and days, we may well see a decoupling of crypto from traditional stocks, similar to what we saw in 2020. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.